Introducing our View from the Top moderator and Axios's Chief Operating Officer, Allison Murphy.
Good morning. I'm Allison Murphy, Axios's Chief Operating Officer. We're thrilled to have today's conversation on expanding pathways to home ownership. And here at Axios Live, we can't do that without the support of partners like FICO, who are bringing today's conversation to life. So without further ado, we are about to host a View from the Top conversation with the Vice President and General Manager of B2B Scores at FICO, Julie May. Welcome, Julie. So Julie, let's start at the very beginning.
Right.
When we think about FICO scores, talk about how the FICO score is used in the mortgage industry and by the industry, and what role does it play in facilitating homeownership?
Yeah, so that's a great question, and it's a good place to start, right? Because I think there is, a lot of people know things about the FICO score, right? You know that it's the score that's used in 90% of lending decisions, not just in mortgages, but across all different types of lending products in the United States. And people know that when you go to a bank or a lender, they pull your FICO score, right, to determine if you qualify for that loan and at what fees and what terms will you qualify for that loan. That's at the origination process. So I think that's very well understood in terms of the role that the FICO score and credit scores play in the ecosystem at the point of origination. Where I think it's a little less understood what the role of the FICO score is across all of the different ecosystem players and stakeholders. And so, after that score is pulled at origination, it is then shared throughout the entire ecosystem to be used for all different types of things. And the goal of those things are to ensure safety and soundness in a $12 trillion mortgage market. So I'll give you a couple of examples. Rating agencies use the FICO score as an input in rating. Credit and capital requirement models utilize the FICO score as an input. Mortgage insurers use the FICO score to help set insurance rates and understand the risk associated with what they're insuring. Investors use it associated with the securitization process associated with mortgages. So that one FICO score, which is pulled at origination, is then used so many times, right? As I'm out engaging with different people in the ecosystem, some of those scores pulled at originations are still being looked at 7, 8, 9 years later, associated with the health of a book of portfolios associated with mortgages and in the investors that have purchased those mortgages. And so that's the part that I think is a little less understood about the criticality of the FICO score in the mortgage ecosystem. And why that's important is we take our position in this kind of ecosystem very seriously. Because when you're using something to make so many different decisions, it's important that you can trust it.
Absolutely.
And so when people ask me what the FICO score means, I say the FICO score means trust. Because when you pull it at originations, it's going to give you an accurate assessment of risk. And then when every other ecosystem player uses that FICO score, they're able to trust it, not just at the point of origination, but 7, 8, 9 years later.
So it's underpinning really an entire system and industry. And we talk about the FICO score, and that's something probably many have heard of, but I think not everyone understands the models and the multiple types of scores that go into this. So can you talk a little bit about dimensions of some of the newer models and scores? And in particular, I know with 10T, you have a brand new model that's come out.
Right, so that's also a great question. When I started leading the FICO score business a couple of years ago, I came from leading our fraud solutions division at FICO, and there we had hundreds and hundreds of models. And I thought the FICO score was a score. It's not. There's a whole bunch of FICO scores, right? I was not educated about this myself, working at FICO for over 20 years. So we have lots of different versions of the FICO score. We have industry versions for bank card and auto, and then we have different versions that are used across the different lending community. Our latest and greatest score is FICO 10T. That's been approved through the Credit Scoring Initiative by the GSEs. The T in FICO 10T stands for trended data. And so what that means and why that's different is it basically allows us to look at things over time associated with the credit reporting agency data. And what that enables us to do is see, are borrowers consolidating their debt? Are they paying certain things down over time? And that just gives us a little better picture. And what that little better picture means is that we can actually improve the results for potential homeowners and borrowers, as well as for the lenders who are offering them terms and conditions. And particularly in 10T, what that means for the mortgage industry is that common operating points, right? So associated with the GSEs, it's about 680. You could actually drive improved originations. So you could originate 5% more home loans. These are big numbers. 5% more potential borrowers could get into homes, and you would not increase your risk of default.
That's
as a lender.
Remarkable.
It is remarkable. We're pretty excited about the results of that study. We recently released a white paper, which we made available to the industry, to say that FICO 10T changes the game for home ownership, and it should be used, right? It is by far and above the best performing credit risk score in the marketplace, 5 times better than the competition. And what that means, right? It's not about being better, it's about getting more Americans into homes. And that's why it's important that it's better.
5%, as you said, it's meaningful numbers.
Right.
So you just spoke about trending data as part of 10T. Talk a little bit about, there's growing interest in other sorts of alternative data that can go into credit scoring. So how does FICO view other alternative data? What new data sources do you see that could be promising for expanding even more access to homeownership?
I love to talk about data, so I'm glad you asked this question as well, right? My analytics science team says I like to play a scientist on TV, yes. Right? Or on the stage, right?
Mine says the same.
Let's talk about the data. We've also pioneered data, so rental data, right? The senator just spoke about rental data. We agree. Rental data could be critical to improving home ownership. It's why over a decade ago, we started including rental data in the calculation of the FICO score. FICO score 10T will utilize rental data when it's available. FICO 9 utilized rental data. Again, over a decade ago, we introduced the use of rental data into the FICO score because we believe that it's important. Unfortunately, as the senator spoke about, we have to do things to increase the volume of rental data to really make that a game changer. Of the 80 million renters in the US, about 2.3 million of them today are having their data provided to the credit bureaus. So it's important, and we believe it could be critical, but we have to fix some of those barriers in terms of getting access to that data for it to really be a game changer. But the FICO score is ready when we actually are able to address those barriers. But other data, right? Telecom and utility data, we include that as well. Cash flow data is something that's frequently discussed. FICO was a pioneer associated with cash flow data as well. We have a product called Ultra FICO, which looks at cash flow data. And what we've seen with users of the Ultra FICO score, this is really focused on people who maybe are not meeting that credit qualification score level. And if we can look at their cash flow data, so data in their demand deposit accounts, their checking, and their savings accounts, then we can supplement traditional credit bureau data with that data to actually provide a better, more holistic view of the borrower, and that can improve their scores. And we see over 70% of people who have significant views of positive cash flow data having increased credit scores with the use of Ultra FICO. So that's really important for those thin file credit invisibles.
Absolutely.
We also have a product called FICO XD. Again, we're going back to the FICO score is just not one score.
Multiple.
The XD score looks at non-traditional telecom and utility and asset data. And so there are some credit invisible populations. 25 million credit invisibles could be addressed with the XD product, and 28 million potential borrowers that have thin files could be addressed with our XD product. The final thing I'll talk about on data, I told you I was a data nerd, I warned you, is BNPL data. So the senator also spoke about, getting access to credit and it being the cycle and how can we improve access to credit. I'm very passionate about this. FICO's passionate about this. It's why we just announced the availability of our models that are coming soon for BNPL. So buy now, pay later is oftentimes a product that gives people their first access to credit. And we think it's important that if people are using buy now, pay later loans responsibly, that can be included in their credit score. And so we announced about a month ago that we're going to include buy now, pay later in 2 new models, FICO Score 10 BNPL and FICO Score 10T BNPL. The thing we've learned, though, after decades in the credit scoring space is it's not enough to build it. You also have to enable the lenders to use it.
Absolutely.
And so what we've done with that product is anyone who has the core FICO 10 or FICO 10T score can actually get the BNPL score for free, so that lenders will get comfortable using it so that the consumers can see the benefit of that. We've also have another program where we made our FICO XD and Ultra FICO score available to CFDIs and MDIs for free. So, because we want lenders to use these products so that we can help the American borrower. And the only way to do that is to provide incentives so that they can see the benefit. They can test it.
So all of this is creating more chances for people's full financial viability to be seen, as well as to make sure everyone in this ecosystem has access to, as you said, secure, trusted assessments of that.
That's right.
Well, I know we are actually just up on time. We could talk data for hours and hours, but this has been fantastic in explaining the ways in which the score and the innovations FICO is driving can support an entire ecosystem of trust that helps more people get into homes. So thank you, Julie, for your time today and for bringing FICO and you for bringing this conversation to life this morning.
Thank you so much. Glad to be here.
Thank you.